I'm Richard Murphy, and I want to talk about the importance of audit. This is something that it seems to me that very few people understand properly. Audit is something that is best known about in the context of financial reporting. Auditors, and we commonly think of those as the big four firms of accountants, but of course there are many auditors in the UK, offer an opinion on the so-called truth and fairness of the view presented by a company's set of accounts as sent to its shareholders. Now, this is a remarkably limited view of audit because, of course, audit is in itself a much broader concept than that of financial statements. We can audit scientific evidence. We can audit the veracity of a story presented in the news. So it isn't just that financial reporting involves audit, other things do. But I am talking about audit here in the context of financial reporting. And I'm really also concerned about it in the context of what are now called PIEs. PIEs are public interest entities, and that is the largest companies in the UK and elsewhere which impact upon our everyday lives because they are so significant and most of us will know about them. An audit in this context is something which is having a crisis. Now, let's put this into context. I have been working in accountancy now since 1975 and working in a chartered accountancy environment since 1979, and I don't think there's been a time in that 42 years when I've worked in accounting firms as a chartered accountant that there has not been an audit crisis. So this is not something new, but it's worse because we have seen major companies failing in a way that we did not before, and with auditors giving no sense of warning as to the fact that the failure was forthcoming. So Carillion failed without warning, BHS failed without warning, Patisserie Valerie failed without warning. In a wider context, Wirecard failed without sufficient warning in Europe. And the losses involved were substantial, and many people lost their jobs, and of course shareholders lost money, and so, just as importantly, did those who were owed money by the companies who were not paid, which has a knock-on effect on many other businesses, as of course it does on the well-being of all employees, and tax revenues are lost as well. So having due process around audit that provides warning not just to shareholders but to everybody who engages with a company that is at risk is really important. Now, a lot of attention has been given to this process since these failures over the last few years became very apparent. There have been 3 reviews for government. The Kingman report, which is looking pretty much at the process of the audit market. One by Lord Tyree, who used to be an MP, Conservative MP. He looked at it for the Competition and Markets Authority and said that there needed to be more competition in the audit market. Again, very much process driven. More interestingly, one called the Bryden Review. Now that one is much more important because what that one does is look at the purpose of audit, and I'm interested in the purpose of audit. Now, in the last week or so, I have submitted with Professor Adam Lever at the University of Sheffield, my colleague there, a submission to the Financial Reporting Council. And they are undertaking a review of the future of corporate reporting. And we made a submission which put in a number of, well, quite radical suggestions on what the future of corporate reporting should be. We suggested that, unlike the view of the Financial Reporting Council, new auditing regulation should be required in association with new accounting standards. And new accounting standards should embrace the idea that financial statements, which are commonly called accounts, should not in the future be addressed solely to shareholders, which is frankly a historical anachronism, but be addressed to all those who are impacted by the operation of PIEs, public interest entities. And that would mean not just the shareholders, but the suppliers of loan capital, banks and others. That is, obviously, employees, past, present and future, all those who trade with the organisation, whether as suppliers or customers, regulators, tax authorities and civil society. That's you and me, even if we don't have a contractual relationship with the organisation, but might be impacted by it, for example, by its pollution that it generates. So we suggest a much broader basis for auditing, and that there is a much wider range of need for information that gives rise to. Now, why is this relevant to audit? Because we argue it is relevant for audit because all this information should be included in one set of financial statements. The Financial Reporting Council push all the information off into side reviews, that is anything other than the core financial data. So they want there to be a public interest report which will deal with things like, well, labour relations and pay gaps, gender pay gaps, maybe race pay gaps, literally high to low pay gaps. Also things like, for example, pollution, the environment, sustainability and so on. Now, I think all of that is a failure, and that failure has recently been discussed by a chap called Professor Dasgupta at the University of Cambridge, who sent a report to the Treasury, who described this whole process of pretending that this type of interest, in particular environmental concern, was outside the framework of the monetary economy, was false. Clearly, the monetary economy is part of this bigger economy that includes the environment. So the Financial Reporting Council is committing a classic, old-fashioned, last-century error in pretending that the environment and other concerns are outside the financial reports. They should be inside. In our submission to the Financial Reporting Council, we laid out a lot of the information that we think the users of accounts would need. We sent in 33 pages, and that was quite deliberate because we want this to be regulated. But what we also said was that we imagine a new role for the auditor. Instead of the auditor saying that these accounts are just a true and fair view of what has happened from a very narrow financial perspective that largely serves the interest of bankers and not shareholders, we think the auditor should have the responsibility to make sure that the data that every stakeholder of any sort needs from the company on which they're reporting is made available to them, and that if the company itself chooses not to provide that information, then the auditor should do so whether the company wants to or not, and include it in their report. And it would be a failure of the auditor if a reasonably anticipatable need of a stakeholder was not met. Now, this changes the whole nature of the audit, because it makes the auditor the representative of the stakeholders of the company when viewing its activities, rather than a mere bystander assisting effectively in the preparation of a set of accounts for a very narrow interest group. If this was to be done, we would have a wholly new perspective on audit, which would then become absolutely critical to our view of how financial corporations work and how we make them accountable. Do I believe this is possible? Yes, I do. Do I believe it's possible within the existing framework of auditing? No, it isn't, because there are obviously conflicts of interest within KPMG and PwC and Deloitte and EY, who are the big four firms of auditors that we now have, who deal with almost all the PIs, the public interest entities in the UK. So we need to have a new audit profession, and that is nothing radical. That is also said by the Bryden report. But I want there to also be this understanding that their job is to fill in the gaps. Do that, and auditing something that becomes deeply socially useful, meaningful, and I hope also a really good profession for somebody to be involved with. This is my vision for auditing in the future. I'm going to be working on it over the next few months because the government is holding a consultation on this process. I'll be coming back to this issue, but I hope you will follow this journey over the next few months as I and others prepare our submissions to the government on the role that audit should have, because it could be fundamental to reshaping the nature of capitalism in the post-COVID society for the benefit of everyone and for guaranteeing our future here on Earth. Thanks for watching. If you're interested in what I've been saying in this video, please subscribe. There is a button below the viewing screen. If you're interested in what I have to say on Twitter, I'm at Richard J. Murphy on that medium. If you want to look at my blog, that's taxresearch.org.uk, and we have a Facebook page as well, Richard J. Murphy. So one of those things will get you more information on what this video series is about, and I hope I'll see you again soon.